a bit of a tech glitch. So with that interesting panel on views on private capital and how experienced fund managers have experienced the Indian private equity ecosystem, we now move on to a report launch. And for that, I would like to call upon stage Mr. Vivek Soni. He's the partner and national leader for PE Services EY India. And we are going to release the flagship IVCA EY PEVC Agenda India Trendbook 2022. With that, Vivek, can you come on stage, please?
Many thanks, Rohan. Let me give that another go. I'm sorry, for some reason we have an echo. Let me give that another go. Many thanks, Rohan. And it's great to be here and present what is the 5th edition of our flagship EY IVCA India Trendbook in this August gathering. And the fact that we're doing it on International Women's Day is a real honor indeed. 2021 has been a record-setting year for both private equity investments and exits alike. And building off from the investment momentum that we saw in the third quarter of 2020, 2021 got off to a flying start. And we ended up notching up more than $77 billion in PEVC investments and over $43 billion in exits. This is across all asset classes of private equity, infrastructure, real estate, and credit. And over the next few slides, we'll try and cover some of the key highlights in our report. But before we do that, it sort of makes sense to reflect upon where we are and where the world finds itself in, given the fact that it's been a dramatic 2 to 3 weeks, a period over which a lot has happened, giving rise to significant uncertainty, like some of our esteemed panelists in the panel before us elaborated on. We moved forward in 2020 in the wake of COVID-induced uncertainty. And all the way through 2021, it was an amazing year for the industry. And now early 22 presents a different kind of uncertainty for us. I sort of I felt compelled to sort of repeat this quote that ironically was given by Vladimir Lenin on how certain decades nothing really happens, and whereas as the last 2-3 weeks have shown us, decades have happened where seemingly a lot of progress made over the last decades after the Soviet era is seemingly looking to get undone. This has obviously given rise to a lot of business uncertainty, which has made the outlook for 22 a bit hazy. We'll get into it when we get onto the slides on the outlook. But for now, let's sort of dive into the salient features of what we saw in 2021. Can we move to the next slide, please? So 2021, as I mentioned, was a record year indeed. Amazing amount of investments, amazing amount of exits. That said, certain key numbers worth highlighting. If we were to put aside the RIL deals that happened in 2020, because one can consider them to be a one-off, pure play private equity venture capital investments in India grew by over 200%. And deal velocity really picked up in the third quarter and the fourth quarter. These 2 quarters were the best quarters ever for private equity venture capital in India. Third quarter 2021 notching up almost $26 billion in investments, and the fourth quarter about $24.5 billion. Another trend we noticed was that while large deals continued, and by large deals I mean deals which are greater than $100 million, they continue to account for over 78% of the investment value, despite that you will notice in the chart, which sort of is interesting, is this number of deals in the 100 million to 500 million bracket. In 2021, there were 155 of such deals by count. We think this is really interesting. It points out to the significant increase in the number of investors that now look to deploy larger and larger amounts of capital per deal. Funds till 3 years ago who wanted to look at 100 million, 150 million deals now want to look at deals which are which are even higher than $250 million, right? Can we move to the next slide? One of the most significant and standout trends that we saw in 21 was the emergence of the startup category as the largest deal segment. It almost notched up $28.5 billion, accounting for almost 38% of the total PEVC investments. This had never really happened before. India was largely, in the past, traditionally a growth capital market. But now startups have really stolen the march. India is now one of the fastest growing startup ecosystems in the world. Just after the US and UK, we overtook UK the last year. And I think we are now number 3 after the US. The other standout factor was the resurgence of buyouts. In 2020, we saw very few buyouts, but there was a sharp rebound in 2021, reaching out to an all-time value of $22 billion, which is more than 2x what we saw in 2020, when buyouts were significantly impacted by the pandemic and the uncertainty surrounding it. Can we move to the next slide, please? The other standout feature is that when you look at a sectoral lens, the growth has been fairly secular. This year, for the first time ever, we have had more than 14 sectors which notched up private equity venture capital investments exceeding $1 billion. This has not really happened ever. The favorite sectors this year were technology, e-commerce, and financial services, which together accounted for almost 50% of the capital raised. This year was financial services' best year ever, but yet it was sort of relegated to third place as technology and e-commerce deals stole the show. The digital adoption, the pace of digital adoption, which was kicked off and catalyzed by the pandemic, took everyone by surprise. And it is no wonder that many private equity and venture capital firms continue to focus on business models where there is a huge amount of technology and digital play embedded therein. Hence, this tremendous interest in technology and e-commerce. Even within financial services, fintech deals accounted for almost 2/3 of the total amount that financial services attracted. Infrastructure sort of dropped to the 4th place. This year, by looking at the total value of dollars attracted by infrastructure and real estate, there's not been much growth from the last year or the year before. 2019 was a fantastic year for infrastructure, where 20 was slow. However, this year, we do expect infrastructure sector to come rolling back on. We think there's a very strong deal pipeline, and it'll be one of the themes that will sort of resurge in 2022 as per our outlook. Sectorally, there were some new themes that are also coming into play, like EVs, online education, media and entertainment. After many years, has notched up a significant amount of PEVC investments of almost $5 billion. The other sectors which shown significant growth from the previous year was healthcare. As opposed to $500 million in 2020, we have more than quadrupled that to $2 billion in this year. Food and agri too notched up almost $1.2 billion. Huge departure from the previous year when they had around only $400 million in investments. So all in all, from a sectoral point of view, very secular growth with some sort of consolidation taking place in the top 3 sectors of technology, e-commerce, and financial services. Can we move to the next slide, please? The exit story is really where the real bright spot is. All along, LPs, till about 3 years ago, I would say, always had a view that fine, India seems to be a compelling opportunity when it comes to deploying dollars as far as emerging market risk is concerned. But what about exits? 2020, we had very little exits. 2018 actually started changing the narrative, and after the large Walmart Flipkart transaction, we had almost $27 billion of exits. This year, notwithstanding any one large deal contributing an overweight position on the exit dollar value, this year we had almost $43 billion of exits. And certain sort of key trends emanate when you look deeper into the data. The first one is really the large strategic deals and the large secondary deals were a standout feature. Very early on in the year, we had spoken about in our IVCA EY publications, which we release every month. We had spoken about how we see strategics looking to acquire startups for new age business models, and more than business models, new age talent to sort of help build out online business models to complement their brick and mortar business models. And the Tata Big Basket acquisition is one such example. We saw some large secondary deals also take place, be it the Hexaware deal or the VFS Global deal, or be it in Cora. So, as far as the constitution of exit type are concerned, as you'll see from the chart, strategics and secondaries accounted for a lion's share. This year was a fantastic year for IPOs as well. When I say this year, I mean 2021. In 2022, we are looking at a completely different narrative, and time will tell when this narrative begins to play out. But as far as the year gone by is concerned, IPOs, there was a frantic activity. We saw certain new age trends emerging. This first ever SPAC listing of an Indian company, a large Indian company, Renew Power, getting listed on the US exchanges by way of a reverse merger. We also had IPOs from many of the category leader new age startups, which went on to list on the Indian stock exchanges at significant premium. Of course, with time, those premiums have reduced significantly given the uncertainty that is now prevailing in the equity markets. Can we move to the next slide? One of the other trends that we sort of have spoken about in this report is the trend of bolt-ons and add-ons by private equity-backed platform companies. Coming off from the weakness of 2020, we saw private equity-backed platforms almost more than double the amount of investments they had made in the previous year. As you will notice from the chart, is going from strength to strength year on year, as more and more private equity funds look at a platform approach where they sort of, as opposed to buying a very large company at the get-go, take control of a medium-sized business, put in place good quality management, systems, governance, best practices, and then look to complement that business by buying suitably sized bolt-on acquisitions. The chart below sort of gives you a good frequency distribution of the amount of add-on, bolt-on acquisitions that have been done by large PEVC investee companies. And as you'll notice, as you move down the trend from 6 to 7 to 12, there are a number of private equity-backed companies that have gone and made a record number of acquisitions, right? We have Renew, which almost made 19 acquisitions at the one extreme end. And then, there were almost 4 companies, Daily Hunt, Ola, MyGlam, MakeMyTrip, which have done about 4 acquisitions, which have done about 6 acquisitions, sorry. And then, there's more to come as far as this story is concerned, as a lot of these private equity venture capital backed platforms look to add bulk, look to add width, look to add capabilities and expertise, depending on the current prevailing environment. And we believe with the uncertainty that has now been unleashed in the Indian markets, many more such buyout or bolt-on opportunities will come in the way for well-funded players. Can we move to the next slide? As far as the outlook for 2022 is concerned, let me just try and frame it this way. We've gone off to a good start in the last 2 months. If you look at the total amount of investments, it's more than 2x of what we saw in the same period last year, but just a tad less than what we saw in the previous 2 months of November and December. Exits have also, have comparatively gone off to a much slower start. And part of that is sort of borne by the uncertainty in the Indian capital markets that started building up by Jan and Feb beginning. Now, In terms of outlook, we would like to break it up into two parts. The medium term and the long term outlook for the industry and for India, we believe, is largely positive. And building out from $77 billion in 2021, there is no reason why the $100 billion mark may not be breached in the next 2 to 3 years, potentially making India the third or the fourth largest private equity venture capital market globally. In the immediate term, given the uncertainty that's been unleashed by the military conflict between Russia and Ukraine, the impact on the crude oil prices, as it was imminent that central banks would be looking to raise rates to sort of try and control inflation. The outlook is a bit hazy. We believe a lot of businesses will face margin pressure this year. And from a strategy point of view, we think value creation by active operational interventions will be the underlying theme for an underlying area of focus for many private equity venture capital funds in 22, as will ESG. More and more LPs, even the public markets, are rewarding ESG compliant businesses, ESG friendly businesses with a different kind of multiple. And now private equity venture capital funds are seized with that and are looking to find ways and means to make their portfolio companies more ESG compliant, more ESG friendly. And this also sort of makes sense for them as it's a way to unlock value. All in all, we remain cautiously optimistic of what the outlook is going to be for private equity venture capital in 22. We think it's too early to call out, the direction in which, we can see this industry growing from where we saw 2021 end, which was at a record high. A lot of this depends on the duration of this conflict and the duration of the surge in commodity prices, because that is one area where the Indian economy is really, really sensitive on. With that, I would like to thank you all for giving us this opportunity to present the key highlights of this report. The detailed report is going to be available on the Conclave website as well as at the EY booth. I would encourage all of you to take a look at it and do share your comments and feedback, and we'll definitely try and incorporate them in the next edition. With that, it's thank you from my end.
Thank you, Vivek. Thanks for the detailed overview of the phenomenal PEVC investment and exit activity seen in 2021 and the key trends underlying therein. Thank you so much for launching this trend book with IVCA. And thanks to EY as well for supporting us in the endeavors that we undertake with the government and the regulators. Thank you so much, Vivek.
Thank you.